Dave, thanks for joining us today.
No problem. It's an absolute pleasure.
So we've obviously worked together for quite a while, and I know who you are. But for the benefit of people that might not, who are listening, do you want to quickly give us a bit of an introduction to who you are and what it is that you do here?
Yeah, I suppose a potted history. I joined UMI a little over 8 years ago and joined as a business consultant. So I work with companies predominantly in the Tees Valley, SMEs, a couple of larger businesses, and just work, help them get grant funding and help them grow. Over the time, I've done some project manager roles. So I was in charge of the County Durham Growth Fund, which was a £9 million business grant fund. And then when we changed away from ERDF funding to UK Shared Prosperity, I was project manager of the Business Growth Fund, which covered Gateshead, Sunderland, North Tyneside, Newcastle, and Northumberland. April last year, I came on board with the Get Funding team. So I now work with businesses, getting them access to debt finance predominantly, and working with them to get the best possible types of finance for their particular circumstances. So in a nutshell, that's me. In my spare time, I run a rugby club, so I'm a volunteer chair of Yarm Rugby Club for my sins.
Very nice. I'm sure that comes in very handy for for helping running the club.
Yeah, it does. Without going off on a massive tangent, but it helps me professionally. So I've seen it firsthand to take an organisation that I inherited that didn't have great processes in place, especially around finance, put safeguards in place, set headroom limits, budget planning, and we've taken it from we're still a small organisation, but we've taken it from an organisation that really runs hand to mouth to quite a financially sound organisation, and that's meant that we've been able to invest in the future quite a bit recently. So having that kind of experience, hands-on, with other people's money as well, because you can't just go and be reckless with your own cash when it's other people's. It really does help me go into organisations and look at where they are and give them some ideas on how to stabilise, especially if they're in a period of flux. And on my desk at the minute, I've got a few businesses that were bought in the last 3 and 4 years. So I've been able to work with the current owners around putting things in place to put them on a good financial footing.
Fab, yeah. So give us a quick sort of overview of what it is that you do on the Get Funding team exactly.
So the Get Funding team has a few main or 3 main themes, and that's all around access to finance. So it's access to grant finance. So we've obviously, for those that know me, we've run many grant schemes over the years. We've got some fantastic staff, and we can go and help people secure grant finance when it's appropriate to them. We have an equity finance arm. So if people want to, in essence, use a stake in their company to generate some cash, which can be fantastic for certain companies, we've got people that will help guide them through the process, start to finish. And the area that I work in is predominantly around debt finance, and it could be anything as small as a small car for the company that we're looking to raise asset finance, right the way through to tens and potentially even hundreds of millions of pounds for companies. Any type of finance, but as a wraparound service, we work with the companies to make sure that that's the right thing for them. So we do quite regularly get asked for particular types of finance, and that's probably not the right thing. The clients just don't know what they actually need. And talking about the risks, is it actually right for them? What the risks to the directors personally? Predominantly it's directors, but not exclusively. And really do be the professional friend to the companies. So I was going to keep that as a short. I think you asked me to do it in brief, but it did seem to go on a bit of that answer, so sorry.
No, it's good. It's good to know. And yeah, I'd say you passed that test. Well done.
Thank you very much.
So you talked there about how basically everything revolves around that access to finance.
Yeah.
And I think something that we hear again and again is that there's currently a challenge around that in the UK. So some quick stats that I've got here to sort of set the scene a little is that there's been a 50% reduction in lending to SMEs since 2011. 43% of SMEs used external finance in 2024, and that's down 50% from 2023. And more and more stats similar to that about how, there really is a challenge out there at the minute. Can you maybe set the scene for us a bit in terms of what that sort of business funding landscape looks like today?
Absolutely. And I think when we talked about where I began, I started where I began life at UMI. But I started life, or my professional life, as a business bank manager. After finishing university, I went to work for NatWest. Worked with mainly SMEs, probably the smaller end of the SME market, helping them with the day-to-day banking. I then went on to Barclays, of which I worked in specialist sector, so it was mainly agricultural clients, landowners, and people that worked in the associated agricultural industries, larger sizes, and gave them access to finance. Very similar, full relationship model. And it was a great period of my career. It was like the old-fashioned business banking, where you'd go and see your bank manager. I often did have the same Oakland offices and huge tables that were quite intimidating for the clients to go into. But it harked back to the days where you'd go back to see your bank manager, have a chat with them, and if they liked the proposition you've got, they'd give you the finance you needed. That changed going through the early 2000s, late 90s, early 2000s in banking, when it became more of a mass market product. And certainly after the financial crash, that changed massively. When I left banking, it was safe to say a business could approach their high street banks. There was maybe 5 or 6, like what we now refer to as tier 1 lenders, and a handful of challengers. And after that, there wasn't really much to go through. Where we sit at the minute, we in essence have full market reach with our products. So we try to keep about 200 people on our panel at any one time. We'll take people off as is appropriate if we're not using them. Again, just for kind of ease of use for our advisors. But there's around about 400 lenders that we know of in the marketplace. Now, some of those are very quirky. Some people, unless you're a very specific need, you wouldn't use those. But even if you said it was 200, if somebody needs finance, how do they know out of those 200 people who to approach, or even which ones exist? It's just so fragmented at the minute. And then, so if you don't fit into the mould where one of the high streets would fit their risk appetite, which is a relatively small proportion of the business landscape, where do you then go? And what we tend to see are people going to the companies that maybe advertise the most, and they're not necessarily the right ones to go to. They have a place in the market, but we've seen quite a few people get trapped in a debt because it was never really right for them. It's a really difficult marketplace at the minute, unless you've got somebody who does it every day to kind of navigate you through, and even then it can be quite tricky. It's a much more complicated world than it used to be.
Yeah, I said it at the end there, but I was just thinking that as you started explaining it, it's really obvious, I think, that you do need somebody whose entire job, like yourself, is knowing this stuff and guiding you through it. Because one thing that I hear time and time again is, I started this business because I'm passionate about X, whatever their business is. I don't really know anything about finance, but it's a really big part of business.
Yeah.
So having somebody, the man with the plan like you there to help sort it out would be so beneficial.
Absolutely. And look, we're not the only show in town. There's some other really good people, and I won't say there isn't. And we often work hand in hand with some of the other companies out there as well that do similar things. So, but when I'm speaking to businesses in a kind of a professional setting, if it's at an event, I do quite often say, nobody, unless you work in HR, starts a business because they're passionate about HR. You don't start an engineering company because you love doing HR of your staff. You don't start an engineering company or a manufacturing company because you're so passionate about raising finance for that company. That's not your niche. And unless you get your business to a certain scale where you can have in-house people that do those activities day in and day out, you really do need a professional friend to help you. And it's a term that I use quite regularly, because we're not in it for the short term. We're in it to help people and help them grow their companies over a period of years. And we'll often put plans in place for to sort out the immediate need, and then to go back at set times to sort out their future growth ambitions. And as I say, unless you're at a scale where you can have full-time members of staff doing it, you need somebody externally to help you along.
Yeah, I like that phrase, professional friend.
Yeah. Well, it's
a good descriptor.
It is true because, and again, I've always said the same thing, and it sounds a bit cheesy, but people buy people. If you find people that you like and you can work with, you'll have a better relationship with them. If you have a better relationship with them, you'll get what you need out of that relationship. And whether that be financially or as general business advice, it can be quite an isolating place having a business. And I go back to the rugby club. When I'm the key decision maker there, and yes, I've got some volunteers around me, there's an awful lot of weight of responsibility on your shoulders. And I often feel for people who are multi-generational businesses and they've inherited a business from their granddad, or even further back potentially, and they're trying to sit there and go, well, what do I do to modernise it? Potentially I don't have anyone to ask about it. Having some external people to just put another set of eyes and sense check things is sometimes invaluable when I get my words out. It doesn't have to be finance people. There's some really good outsourced FD type companies or business coaches that can give that second set of eyes on a problem or help a certain period of certain sector of growth in your own personal skills, not just the size of your company.
Yeah, it's important to, I suppose, ask for that help and support when you need it in any aspect. And I think finance in particular is a bit of a tricky one because it can be so complex and confusing that, I don't know, it almost seems harder to find the right person to help you out because I don't know if are they trying to pull a fast one on us here or are they trying to do this or
It's one of the things that I absolutely love about doing what I do for this particular company. And I'm aware this is a podcast, it's not an ad for me or the company. But we're an employee-owned company and we're a B Corp company. And it's easy for that to sound just like corporate buzzwords or like a marketing ploy. But we generally work for the best of the people we work for. And our fees for this, because it is a commercial service, open and upfront and discussed on day one, and we don't deviate from that. There's nothing hidden. So everything we do, we treat every deal like a regulated deal. We treat every client as an individual, and we treat them in the way that we'd like to be treated, purely and simply. And because of that, I can go into a company and I don't feel like a salesman, and I can say, this is what we do. These are our values. This is how our values align with the marketplace. There's things that we don't do. There's things that we do incredibly well. And be honest with people. And because we give that level of honesty, I'm yet to meet a client that goes, "Ooh, no, I don't quite like that." But it is also true that there are an awful lot of sharks in this industry, which, yes, there's some fantastic people. As I say, I mentioned earlier, we work with other people in this industry because they're great. But also there are some people to avoid, and that's why we launched this service. We're a business support organisation at heart, and we saw quite a few times people get what they thought was that professional friend, not necessarily just in finance, but in business support. And it was someone who was just working for the fee. We're not working for the fee, we're working for the success for the client. And that's the difference between a good company, us included, and a bad one. We won't chase a fee for at the detriment to a client, and that's the acid test for any company. If any business owners out there sitting there thinking, I've been recommended to do something and it doesn't sound right, you maybe need to reassess that relationship you've got with your advisor.
Yeah, that again is very important, and that sort of transparency and trust that you can build up, because it's well, I suppose it's not just the responsible business thing to do either. It's just being a responsible human being.
Absolutely.
Like you say, there's a lot riding on this for people that
Yeah.
put aside the fact even that they're passionate about whatever. If it's their business and their livelihood, there's families to consider, there's houses to consider, all sorts. Isn't there?
Yeah, and it's something that I often do discuss with clients. What happens if something goes wrong? And so, and it could be quite a simple thing of, well, actually, we've got a company with a huge balance sheet. They've got loads of assets on the books. They've got very little debt. If something goes wrong, what's the potential for something to come back on those directors? And it could be such a very small chance. But if unless it's been discussed with them, then how do they know? Because often people will have like personal guarantees put in front of them, and they'll sign a personal guarantee, and they don't fully understand the implications of that personal guarantee. On the other side of it, we'll see businesses, the professional sectors are a great example. And let's give you the example. I'll make one up: a marketing company, and there's going to be a buyout of this marketing company. Now they haven't got a huge asset base to leverage against for the finance, so the directors are going to be signing personal guarantees. Now, if anything goes wrong with the business, if they hit a period of bad trade, if they've not planned for that kind of dip in turnover, maybe they could lose a couple of clients off the back of the takeover, then in theory, the business could fail. And if the business fails and it has a significant level of debt with personal guarantees, those personal guarantees are liable by the directors. And again, if they don't engage with the people they owe the money to, that can quite easily, and has turned into court proceedings, potentially charging orders over properties. It can, if not done properly, ruin people's lives. And if people don't have that kind of conversation of what could go wrong, and unfortunately that's what we're seeing in the fragmented marketplace, that if people do find the amount of funding they need but don't necessarily get it in the right way, especially in no disrespect to the platform lenders, they maybe don't read all the paperwork that comes out about the size of the personal guarantees in place, don't understand the implications, you could quite easily get into quite an awkward situation.
Yeah, there's a lot to consider there,
Yeah,
isn't there?
absolutely.
I certainly don't envy you with the amount that you've got to take into account there. And
Yeah, there's a lot to take into account, but it's also, I feel very privileged in what I do, because hopefully everything we do is in a responsible way and everything is understood, so people go into things with their eyes wide open. Entrepreneurs, which I actually managed to say properly, I normally stumble with it, so thanks for that, are generally speaking people who are willing to take risks. If you don't want to take any risks, go and get a job somewhere. And it is that simple. If you're willing to take the risks, the rewards can be huge, absolutely huge. Standard of life, ability to decide your own destiny. They're all things that are associated with having a business, but there is risk that comes with that. And as long as you've got somebody who can help you with that risk, that's probably a good risk to take.
yeah, yeah, fab. Well, let's go on to some of maybe the more practical tips for people that are thinking, is it right for me? Is it not to sort of be pursuing options right now? And I suppose try and mitigate some of that risk that you were just talking about. So if, there's a business listening, they think, I might need some finance, but I've to be honest, I've got no idea where to start, even thinking about myself and knowing if I'm even ready for it or anything like that. What's the sort of first step, I suppose, in deciding, am I ready for finance?
So the obvious thing for me to say is go online on our website, register your interest.
Passed again. Well done.
Everyone who comes through our Get Funding service has a contact with us. And it might be that business isn't ready for finance at all, but we can give them the right signposting to try and get them in the right place to get into that position. The honest answer is a business owner needs to sit and think, and it depends on the stage of their business, in fairness. Is it right to take this finance on? is it going to give me the growth that I need, or the stability that I need? Is potentially the right way. And it goes back to the old saying: turnover is vanity, profit is sanity, cash is king. And the cash part is the really important part of that, because every time you take out finance, at some point it's got to be paid back. So can your business really generate the kind of cash it needs to pay that debt back without really impacting on its cash headroom levels? So an example of this, I spoke to, in essence, a pre-start fairly recently who didn't know about the British Business Bank startup loan, the government startup loan scheme. That's a great scheme. If you've got multiple directors, you can take multiple loans. But in essence, it's loans of up to £25,000 at a fixed rate of 6%, personal loan for business purposes, and it's to help help business owners and potential business owners get their ideas off the ground. But what you've got to do is sit and think, well, actually, before you even consider taking that, and again, I'm talking about like the kind of pre-starts and the startups, have I got a product that you can monetize? Because if you've not got a product that you can monetize, you should never take debt, because you'll never be able to pay that debt back. And that's the harsh truth of it is, unless you've got a commercially viable product, you should never take debt for it. And so once you pass that asset test, is it commercially viable? Yes. How long is it going to take for me to get to the level of profit in my business that I can take the cash out to repay the debt? Well, if it's going to take too long before my repayments start kicking in, or I can't borrow enough to cover that period, then you shouldn't take the debt. You need to go back to the drawing board and think, well, how am I going to do this? And that's often where the equity piece comes in. Of I've got a minimum viable product, I need another 3 or 4 months to fine tune it and really get market traction. Once I get that, I need to take that for another year before we really become high revenue generating and really profitable. And maybe 2 years down the line or 3 years down the line, we'll get to a stage where my company's worth £20 million. Great. And that equity piece comes in and supports with a big chunk of cash that doesn't need to be repaid until you've got to a set point in the future where the provider of that fund gets a really good return on their money. It's great. So that's where an equity piece would be better than a debt piece. But if you can sit and go, well, actually, I've got a product, and let's say it's a marketing company that we touched on earlier. We've got pipeline, which is going to give us, make sure we're covering our costs by the end of the second month. And by the end of the third month, we're turning a profit. By the end of the year, we're going to be turning over a really good profit. Then debt is absolutely the right thing to do, because you can plan in that debt repayment and not overly stress yourself, and that debt will give you the tools to grow. I know I've only talked about the startup market, but the same principle is the same for if you've got a business who's established and you're looking at your growth curve and sit and go, well, what do I need to get myself to that next level, to get myself to that extra 3 members of staff so I can take a bit of a step back, or get myself off the tools and be more of a manager of the business rather than managed by the business, or get myself to a stage where I'm going from a £5 million turnover company to a £20 million, and then the scales of economy means that I make so much more money even at the same profit margins. As long as you can plan in how you're going to repay that money back, then that's the right thing. But at any stage, we're more than happy to talk to people and give as much advice as we can, give the right signposting if our ongoing relationship isn't needed. And when that company's in the place to be supported, then come back to us and we'll start them on that more in-depth journey.
Yeah, fab. No, it's really helpful. So I've decided then that is for me, and I should take a look at that. What can I do to, I suppose, be funding ready? I assume what they're going to look for is, can I pay them back?
Yeah.
How do I prove that, or is there other things that I might not be thinking about that funders will also look for?
So typically, and again, some of these aren't going to be relevant because some may be startup businesses, some may be existing businesses, but you'd want to come together with a pack of your last set of bank statements, ideally 6 months if possible. Obviously, if you're a startup, that's not possible. That'll be both business and personal. Your last set of accounts, ideally your last two sets of accounts, because that'll cover a 3-year period. Obviously, if you don't have those, you can't bring them. A 12 to 24 month forecast, everyone can do that. Ideally within an assumption sheet. And it's what a lot of businesses and will go, oh, well, I'm going to turn over £3 million in the next year. So they'll take £3 million and divide it by 12, and that's the monthly turnover. That's just not going to happen. Unless you're making all of your money through retainers, it's just not going to happen. So sit and think about, well, how is the money going to flow in and out? I'm going to do a project. I need to cash flow that project. There's costs of that project. Then there's an invoicing period. Do I get paid at set milestones? Program all that into your cash flow so it's as realistic. Because the worst thing you can do is go and sit in front of a funder with a cash flow forecast that looks like it could have been designed in crayon. It sounds a bit brutal, but get some help if you need help. And that assumption sheet adds so much credibility. So it's a sheet that just talks about where you've got those assumptions from. I think I'm going to win this contract because I've engaged, I've tendered, I've looked at the tender process. I believe I'm going to score really highly against it. Or I've been told that I'm going to get this project. We're just waiting for the start times. It's been quoted on for a while. I've had my feedback. Anything like that. Or we've done a lot of market research on this. We believe these people need my services. I've started pitching them. Out of that, we believe so many of them are going to complete. That's where I've got these assumptions from. So that adds a lot of credibility. And it's a business plan. And again, over the last far too many years than I want to admit to, I've seen every type of business plan. Keep it relatively brief. It could be what used to be a brainstorm. I think it's now a mind map. That could be your business plan. It could be a very tight 4 or 5 page document. It could be pretty much anything in between. But if you've got something and it's something that you can then go back to as things change, that adds a lot of credibility. It makes it a lot easier for lenders to see what the overall picture. And then that takes us to where you're going to sit in the marketplace. Because if you want to raise an awful lot of money from a high street bank and you haven't got proven financials, you're almost wasting your time. There are other lenders in there, especially British business bank lenders, that will work in that marketplace. And so there's some really, really good organisations, and a lot of those are national. Some are regional. There's regional schemes that are appropriate. But again, you've just got to make sure you're pitched in the right place, and that comes back to speak to somebody who can help you through that process.
Yeah, I was laughing there when you were talking about the forecasting and being realistic. 'Cause I had a sort of flash of every episode of Dragon's Den where they say, "Oh, this valuation's rubbish. Where did you come up with that?" And I'm sure that's also happened a lot in cases where businesses are looking for
Yeah,
some sort of finance.
I must admit, and I won't give anything away because by the time this goes out, the people won't know which day it was. But I have had a cash flow today for a company who's been pretty steady over the last few years. Very little fluctuations in the average cash balances. Yet at the start of their cash flow, they start with in the tens of thousands, and by the end of the 2-year period, it's their cash flow showing them with £3 million in the bank, and they're doing nothing dramatic in that period. They just haven't looked at what their actual costs are, and it is that simple. It's easy to sit and go, well, my rent is this, my staff costs are this, my insurance costs are this, my finance cost is this. That's all my costs. And somewhere, and we haven't worked it out yet, somewhere in that spreadsheet, they've missed something massive. Because what I will guarantee, in 3 years' time, they won't be sat, or 2 years' time, they won't be sat with £3 million in the bank. If things go really well, they might have a couple of £100,000, amazing. But they're not going to have such a huge change. I've seen many businesses with seasonal fluctuations in the turnover, and they're just not programmed into the cash flow, so it doesn't represent the flow of cash through the business in the year, so it's pointless. And it's just making sure that you've got that sense check, because you're right, you don't want to sit, and I don't watch Dragon's Den, I really should, doing what I do. But you go and presumably when these people are told by folk that really know what they're doing, what you've presented is pointless, it must be really soul destroying. So make sure your numbers are right.
Yeah. It's understandable you don't watch it. You don't want to take your work home with you, do you? But yeah, so I suppose the key thing there is to be realistic and look sensible in that way as well. Because I suppose aside from the actual numbers and the financials of it, if you walk in there with those that show that you've not really thought about it, or you've messed up in it in some sort of way and not checked it, that probably plants a seed of doubt in their minds as well, and thinking, even though it looks good on paper, like, can we really trust them? Are they a trustworthy person to give our money to? Maybe not.
It goes back to the same thing that many of us will have done for years, even at school. You get somebody to look over your work for you, just to double check it, at any point in your life, and they'll see something you've missed. It's nigh on impossible to get it right first time, because you're so invested in it. And I don't know whether people are like me, but as I'm writing something, I'm thinking what I'm writing, and I'm so involved and I'm so close to it. And unless you can sit and reread what you've done and go, actually, if I articulated what I wanted to, then it's easy to miss the mark. It's easy to miss big things. And sometimes, literally within 30 seconds, somebody else can look at them and go, hang on, you've missed that. So, yeah, get proofread. Get somebody to sense check before you do anything. And it's difficult. It's so difficult, especially for the smaller end of the SME market, where you've got an owner manager who's, especially if they don't have any staff, or they've got a small number of staff that they're also managing with a day job, to sit back and go, I'm going to take the time to be a bit more zen and then work through all these financials, or even just a business plan. It's really, really difficult to do. And I think for those that haven't been in that situation, it's hard to understand how difficult it is. So yeah, whether it be us or somebody else in your organisation or a family friend, get them a look through it. On the note of family and friends, this is some weird and wonderful things, so sense check that with a professional that knows what they're doing.
Yeah, I think I'd rather go to me professional friend for that. I've got too many memories of crying over maths homework.
Yeah,
I can't do it.
I've got a feeling this professional friend might stick.
Oh yeah. I'm not forgetting that one anytime soon. You touched on it at the end of your previous answer there, but I feel like it's probably important to highlight about getting the right type of funding for your stage and your goal. And I suppose if you get the wrong type, can it slow you down from actually achieving what it is you were trying to there?
Yeah, absolutely. And there's degrees of that as well, because it can absolutely be a blocker. So let's think about an example. I've got a company at the minute who are looking to buy the premises. So they're going to be doing quite a large commercial mortgage. They need to take some cash out the company for the deposit, and relatively speaking, they've got good levels of affordability for the mortgage. So in theory, it's not too hard. However, they also do a lot of asset renewals. So their assets have a finite lifespan. They have to renew them. So for them, you look at all the other costs that they've got to go out of their available cash for debt serviceability. If they don't get those structured right from the first place, and it can really, I suppose, eat away at your available cash for debt servicing. So then when you take that to a lender and say, I want my commercial mortgage now because I really, really want this new building, and they say, well, I'm sorry, you can't afford it. And they say, well, I can't. Well, no, because you're paying out so much in little bits of asset finance over relatively short periods, or alternatively, they've got really big deposits potentially, because yes, you're going to save interest over the longer term, but it's taken out 16 grand out of your business for one vehicle, and you need a couple of vehicles, and all of a sudden you've eroded the cash that's going into your deposit. And then when you're looking at your cash flows and you're sitting there thinking, I need to keep a certain amount of cash headroom in my business for it to operate effectively, that's not there because you're making all your debt repayments, you've taken the cash out for your deposits, and then you sat there going, well, hang on, I need to invest for growth. Where's the cash going to come from that? So in a relatively easy way, you can erode your cash from the business. So, and if it's a company that has tons of cash, very little investment needed over the coming years, then pay big deposits for stuff. It's great. Do things over a short period of time with big deposits, and you'll pay the least amount of interest possible. If you've got investment plans, that's probably the worst possible thing you can do, because it erodes your cash. So you maybe look at alternative sources of finance over longer periods of time, with lower deposits. And yes, you're financing a larger amount of money over a longer period, so you're getting more interest. But in the greater scheme of things, it allows you to grow in certain areas, and it might add millions of pounds worth of, potentially, of turnover to your business, or hundreds of thousands of pounds worth of profit. And it's just making sure that you're getting the right type of finance for you at any one time. The current, I suppose, issue that I'm seeing, and it goes back to your first question about it being a very fragmented marketplace where people don't know where to go to. We're seeing people invest in their growth plans, but they're using short-term lending facilities for it. So a platform lender, or you'll see the adverts on social media or potentially TV saying, we can sort you out a loan within 24 hours. They have their place. If you need a quick VAT injection, they could be perfect, because you can pay them off in a short space of time. It doesn't matter that the interest rate's all that high, because you're not paying the interest for that long. But when you've got things like building refurbishments or fixed asset purchases, which I've seen funded for with these unsecured loans, it's very rarely the right option. There's usually a better option for the business. And that's where people can fall down of just going, well, I don't know where to go. I've seen this, I'll take this. And it's quite easy to get stuck in the kind of cycle of being in a few short-term loans, taking on another one. All of a sudden, your repayments are starting to get out of control. You then can't invest in your growth. And that's what I'm starting to see quite a few times. Well, even within the last week.
Yeah, yeah. And I feel like that highlights again how important it is to bring in that outside support from the likes of yourself.
Yeah.
Because, you know, they're going to be so wrapped up in it, and in the actual goal they're pursuing, I suppose, as well as being influenced by their spending habits and their sort of history with financials in general. To have that outside look, to step in and go, I know what you're saying, but outside looking in here, as someone that's detached from the situation, this is actually the best way, sort of, for you to go about it.
And what we often see is that it'll do, and it is quite. You've got a business owner who is incredibly busy. They know they need to get some cash for something, either a short-term cash flow need or an investment, and they don't know where to go. Well, they'll see something. Can I get it? Yes, it'll do. I'll sort it out later. And sometimes sorting out later can be a nightmare. So yeah, let's encourage people to plan ahead as much as possible, and reach out to people like myself.
Yeah.
Me. Choose me. But people like me, and we'll be able to help you along the way.
Totally.
As long as we are one of the reputable ones.
Yeah, because it's that timing element as well,
Yeah.
that you were just mentioning. Obviously, if you run your own business and you're small and you've maybe not, it might just be you might be you and only a couple of others, like the time that it would take for you to have a look into all this properly, you'll just go, I've seen that, seems fine, they'll give us the money, so that's all I want really, and they'll give us the money, that's fine. So yeah, a lot of things to consider for people, and why someone like you being involved would be so helpful. So what if then I've perhaps thought about this before and tried it, and I've tried going for finance, but I've been turned down for it in the past? What would your sort of advice be there? Definitely
reach out. So you need to understand why you've been turned down to start off with. And realistically, sometimes it's an unpleasant but needed chat with somebody for them to turn around and say, actually, what you've got isn't viable. We need to either bring in a third party that works in ultimate insolvency, or reconsolidate the business before it gets too late. Because usually when things aren't great, they can usually be turned around if there's something in there. People bury their head in the sand, cause the biggest problems, or have the biggest problems in the end. Or if it's sometimes it could be that you've just not said the right thing, you haven't spoke the right language to the person you're speaking with, or it could be that you've not looked at the right structure. So I'm looking at a deal at the minute, which is a business purchase, and it's just the way the business purchase has been set up doesn't fit what the lenders need to see. So going back to the negotiating table after with a little bit more information, to change the structure of the purchase to allow it to fit the mould for the lenders that have the risk appetite to do it. Sometimes that's all that's needed. Sometimes you've just not asked the right person. And we have a case where it's a high street bank that approach them, but the sector of the bank that do that the sector of the bank they approach just don't do that product. But there's another part of the bank that they didn't know about that do it. And that's someone we deal with on a regular basis. So sometimes it is just making sure that you've asked the right questions in the right way to get the answer that you want, which is the big yes. So yeah, every case is different. Reach out.
Great, yeah. And I mean, I knew it anyway, I promise, but throughout the conversation, I think it's became really obvious how important having that role is, as I've said. But I feel like I can already hear somebody saying, well, why don't I just Google this myself or ask ChatGPT myself or something like this? Like, I'm sure that'll give us the answers. So why is going to you and the Get Funding team, for example, better than trying to do that?
So it's quite a fun answer to that question. And those that know me, I can be a bit mischievous, so I'm putting it in a context that I'm being recorded, but it's ultimately you could, like, let's say you're a business owner, any industry you want, and you go, I could do this myself, and you could literally ring round every lender, and you will almost certainly at some point find a home. But the risk is you find the wrong home before you find the right home, and do you know? And even if you do, how long is that going to take? And not in all cases, but the majority of our fees, in the majority of cases, our fees are paid for by the lender. In many cases, we get preferential rates because we put that much business through certain lenders. And we have full market reach. So you could be at a stage where just Googling it, just ChatGPTing it, you end up with a lender who will fund you, but they may be funding you at an interest rate of 16%, 32% or more. I have seen more, when another lender might do it at 8%. And again, those aren't made up figures. That's stuff that's been on my desk fairly recently. So you'd never know whether you've got the best value for money until you've been through every single company and put it through every single person, and that's not possible. It really isn't. You'd spend so much time doing that, your business would almost certainly fall over because you've taken yourself out of that business for weeks and weeks and weeks on end. Whereas you hand it over to myself or somebody like myself, we deal with those people so regularly. We know people's risks appetites generally. Then we can pick up the phone and have it answered and chat it through with the company before it even gets to credit. We often get credit kind of framework sent out to us. We get risk pricing sent out to us, so we know if people sit in certain levels, certain lenders will do it at certain amounts. So even before we pick up the phone, I've got a rate card for a certain lender. I know what they're going to charge, and if the risk profile of the client doesn't fit into that, then there's no point in wasting time with that lender. We're much more efficient, and that, bearing in mind, I've just spent an incredible amount of time saying we're much more efficient. You've got to say the irony isn't lost.
No, fair enough. You know what? I'm sold. I'll come to you instead.
Thanks,
I will. Fab. So I suppose just finally then, how do people get in touch with you or the wider team if they want
Search
to?
Umi. All roads lead to Rome. All of our social media platforms, websites lead to somebody in Umi. So if you reach out via our website, our social media, you'll always relatively easily be able to, you'll usually find a call to action button on pretty much every page we have. So hit one of those, ask for a bit of help. Our website is Get Funding at Umi. I don't know, I can't remember the exact website, so thanks for that.
Umi Get Funding.
Yeah, thanks, Umi Get Funding. So go on to there, but any of the Umi sites, and it goes back to what you said earlier, can I just Google Umi, will you come up? Yes, we will. Google Umi Business Support, it's UMI, we're there. I'm not going to put my own personal details on here because I'll just be inundated.
That's fine,
but yeah, you can always get through to us.
Fab. Well, thank you very much for having this chat today, and I'm sure there'll be more to come. Cheers, Dave.
Thanks a lot.